very good morning. Wishing you a fantastic Friday ahead. Welcome to today's episode of Morning Wealth. Treasury yields rise sharply. Earnings from Beyond Meat, Airbnb, and Coinbase IPO filing. These are the three things that we will talk about. Treasury yields rose sharply on Thursday, shaking stock investors' confidence. A sell-off in Treasury sent the yield on the 10-year note up 12.5 basis points to 1.51, marking its highest level in over a year. Theories abound for what was behind the move, ranging from a poorly received auction for the 7-year treasuries to hedging-related sales by mortgage security holders to the fact that the treasury market doesn't have as much depth as in the past, so moves can be more pronounced. The more important thing to bear in mind may be that with the pandemic loosening its grip, expectations are becoming more widespread that the economy is about to get a lot better. Putting money in a safe haven such as Treasury isn't as compelling in that context. Good news on the economy is good news for companies, but the rise in yields is posing problems for their stocks, particularly for richly valued tech stocks that have done so well since last spring. Investors rushed out of some of the hottest stocks of the year, sending shares of companies like Apple, Alphabet, and Netflix down more than $2 apiece. Tesla shares dropped about 8%. While relatively cheap corners of the market appeared to hold up well at first, with bank stocks and energy producers initially higher for the day, those gains dwindled in afternoon trading, leaving few places for investors to shelter. The Dow was down 1.8%, pulling back from Wednesday's all-time high. The S&P 500 was down 2.4%, while the tech-heavy Nasdaq was down 3.5%, notching its biggest one-day pullback since October. The dollar rose with the Aussie among the weakest G10 currencies. Gold dropped and oil eased lower. Asian equity futures are looking very red. Not everything fell, however. Shares of GameStop, Exhibit A in the meme stocks journal that has surged in popularity among individual investors active on sites such as Reddit's Wall Street Bets, rose about 19%. Rising bond yields don't always augur poorly for stocks. In fact, many investors are betting that a sweeping fiscal stimulus package from the Biden administration, coupled with increasing vaccinations, will help corporate profits across sectors improve in the second half of the year. Roughly 91% of fund managers surveyed by Bank of America believe the economy will strengthen this year. That's the highest share on record since the firm began surveying investors in 1990s. We got some good data as well. Labor Department data released on Thursday showed the number of Americans applying for unemployment benefits fell sharply last week. On the Fed comments that we got, Fed isn't concerned about rising yields and easy policy isn't ending anytime soon. Several branch presidents argued that the increase reflects economic optimism. James Bullard called it probably a good sign so far. Raphael Bostic played down the need for the central bank to get involved, and Atlanta chief also emphasized labor market weakness, especially for low-income workers, as a reason to keep the pedal on the gas. To quote him, just to remind you, our mandate is full employment, it's not the size of GDP. Moving on to results, Beyond Meat rallied post-market after its results were overshadowed by a pair of strategic partnerships with McDonald's and Yum to develop plant-based options. As for results, revenue fell short as at-home demand for its products moderated. It also won't be providing guidance for the year until further notice. Twitter wants to double its annual revenue to $7.5 billion by 2023 and expects to increase its user base by an average of almost 20% each of the next 3 years, targeting about 315 million daily active users by the end of 2023. Twitter also gave the first outline of a potential subscription product that will let people charge followers for access of special content or experiences. The company mentioned a new feature called Super Follows, which it described as an account subscription. It is also considering tipping or letting users donate money to people they enjoy following. DoorDash's sales beat, but it said the outlook this year is highly uncertain. Shares fell sharply. Airbnb reported quarterly revenue that beat analyst estimates, benefiting as travelers chose vacation rentals during a holiday season marred by rising COVID-19 cases. The company didn't give a financial forecast and it was cautious about 2021, keeping a lid on share gains in extended trading. Releasing its financial results for the first time as a public company on Thursday, Airbnb showed sales of about 859 million in the final 3 months of 2020, a decline of only 22% from a year earlier. Analysts had been projecting for a sharper drop to about 739 million. Airbnb has been an outlier in an otherwise battered travel industry. Chief Executive Brian Chesky successfully pivoted the company's strategy to focus on rural stays while hotels in big cities suffered. At the same time, he cut a quarter of staff, paused non-core operations, and slashed the company's hefty marketing budget to keep expenses down. The uptick in revenue combined with deep cost cuts helped Airbnb turn a third quarter profit, boosting investor confidence ahead of its IPO in December. Airbnb shares have climbed nearly twofold from their IPO price. The company's market capitalization of more than 100 billion makes it more valuable than Marriott International, Hilton, and Hyatt combined. Lastly, Coinbase filed to go public via direct listing on Nasdaq. The biggest US cryptocurrency exchange said it won't raise any proceeds in the transaction. The company has been valued at more than 100 billion in recent private transactions, Axios reported, meaning it could be one of the biggest companies to go public since Facebook. That's the update. Stay safe and healthy, and I'll speak to you on Monday.